Good afternoon, ladies and gentlemen. This is the Defion Productions podcast. I'm your host, Don Rinaldi, the hardest working nobody in Bitcoin. This is the only live stream podcast streaming live out of the Western New York area in the Niagara Falls area. This is the Bitcoin only podcast today, as Troy will not be on. So we're going to talk mostly Bitcoin stuff. It's just me today. We'll start with the charts, where we have a lot of action in Bitcoin as well as the crypto sphere overall. We're sitting at a price of $93,454. We are up in the last 7 days almost 10%. We had quite a bit of a move in the last 48 to 72 hours. Bitcoin made a move from the low 80s to mid 80s and finally broke through some resistance at 89,000. Now, the weekly chart is where that 89 is really the most relevant, and that won't be until Sunday. So if we hold these levels at least above 89 until Sunday, for all you chart guys, which I'm not one of them, but from the people that tell me these types of things, that's a good thing. So if we can hold 89,000 through Sunday night at about 8 o'clock, we should be good to go, moving in a bullish direction. Ethereum has made some moves. It's actually up a little bit more than Bitcoin, 1763, up 10.14%. XRP is up to 220. Solana's up the most, 151.88, up about almost 13%. The total crypto market cap is up to 2.92. And this right here, the Fear and Greed Index, is at 53 neutral, which was hanging out at extreme fear for quite some time. So we're in a neutral state. Bitcoin price bullish. Let's take a look too, because I actually, surprisingly enough, I haven't even looked at stocks today, so I have no idea what stocks are doing. So this will be my first time actually even looking at the charts today. So let's take a look and see what's going on. Looks like the Dow is up 420 at 1.06%. S&P is up 1.81, 97.52, and the Nasdaq up the most. Looks like tech is having a pretty good comeback this week. 409.92, 2.45%, with about less than an hour of trading left. Gold hit 3,500 the other day. Yesterday, I did look yesterday, it was down about 4.5%. At one point, I saw it down about $120, which is a huge move for gold. Looks like it's gaining some momentum back today. It's up $51.90 as of right now, up 1.58%. In terms of gold and Bitcoin, it looks like gold started the rally. Gold's been having a really good year, and it looks like Bitcoin is starting to move. Let me see which one of these I have here that I want to go with. Here, right here, this chart here. This is the global M2 money supply, which we've been talking about on this podcast for at least a month. The M2 money supply lags about 70 to 80 days. And you can see here, charting out the next 3 months, it's hitting an all-time high, at least since COVID, way up here. And Bitcoin, if you look at all of the green and the red here, it's been charting and following. Some people will say it doesn't, but if you look at the charts, for the most part, it typically does follow the M2 money supply. And it's been charting along, except for this little gap here, and going down as the M2 supply went down. And now we're on its way up. And if you look at where the M2 money supply, as of right now, has us out at 3 months, which, again, nothing's perfect. This doesn't mean it's going to exactly hit this, but giving you an indication that M2 supply is up around a value price of Bitcoin about 160,000 a coin. Not saying it's getting there in the next 3 months, but you can kind of see as this starts to chart along and follow these moves in this M2 supply that we're probably going to be hitting a new all-time high in Bitcoin sometime fairly early, either late spring or early summer, if it continues to chart this M2, which is obviously good news. And in terms of all your altcoins and your shit coins, I'm sure that they'll have their moves as well. You like to move in those types of territories. The the big news that we'll start with this week, I'm gonna play this video.
Jack?
Let me stop it, and then let me expand it. I'll play the video, and then we will talk about why this is important, what's going on, and my thoughts.
When did this idea come to be?
The founding story. So I co-founded the business with Tether. I would say I've known the Tether Group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow. And most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public markets.
Jack, I think off camera, just before we started, you used the word vehicle, a vehicle for Bitcoin. I think like a reasonable question that people have is, what does the CEO of a new company whose mission is to accumulate Bitcoin do day to day? Like, what is it that you're going to try and manage or achieve?
Yeah, so for all the Bitcoiners out there, we encourage you to check out our filing. We've introduced two new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21's an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet.
But Jack, you already have a Bitcoin product, and it's Strike.
Yes.
And it's where people can buy, sell, store their crypto. What happens to that? Are you still going to be leading that business?
Yeah, I'm the CEO of both companies. We're actually disclosing today at Strike some of our financials. So Strike, immensely profitable. We have over 20% EBITDA margin, 85% gross profit margin. We have only 75 employees. So on a gross or net profit per employee basis, we got to be one of, if not, the biggest in the Bitcoin space in that regard. And so it's an incredibly strong business. It's doing well. I'm so proud of the employees and our investors and thankful for our customers. And, Caroline, you can just do things. And I'm going to lead both businesses. I truly believe my purpose on this planet is to try and help Bitcoin have a chance to change the world in what I believe is the right direction. And I think Strike and 21 both independently work towards that.
Jack, you have plans to raise capital, and I guess not just like as a one-off, over time raise capital, right? How will that work in practice? What mechanisms will you use? And a lot of people that watch the show ask, if they're not registered institutional investors, how can they participate in that?
Yes. I thought for a second you were going to offer me some money to buy some Bitcoin.
Absolutely not. Absolutely not.
I'm kidding, man.
Go with my actual question.
No, yeah. Totally. So listen, we are hopeful to have our shares listed on a stock exchange under the ticker XXI. Today, we are trading under CEP, which Caroline mentioned is our Cantor Equity Partners, and that stock is trading in live today. If it's successfully merged upon closing, it will be XXI. We do intend to raise as much capital as we possibly can to acquire Bitcoin. Again, my one rule to my shareholders is it will be accretive. Our Bitcoin per share will grow. We will never have Bitcoin per share negative. At least that's our intent. Our intent is to make sure that when you're a shareholder of 21, that you're getting wealthier in Bitcoin terms. And that's my job as a CEO to deliver that. So we plan on raising capital in all different type of sectors and markets and really blending Bitcoin and incorporating it in the traditional financial system to deliver a powerful equity to the public markets for Bitcoiners.
Is that the selling point versus ETFs? Because you came up with this idea over the course of years, and since that time, there's not just been strategy that you can invest in or block, but you can get spot Bitcoin ETFs. What's the upside? And in fact, a viewer from Bloomberg's asking, like, how can you have more BIPs than an ETF?
Right. Okay. So I gotta be clear. I'm not preaching a future that I can promise. This is hypothetical, and this is our intent. Somewhere my lawyers are like, that's our guy, right? But our intent, Caroline, is that when you buy a share of 21, and let's say that's 0.005 Bitcoin per share, we go out and we intend to close deals, build products, add Bitcoin to our treasury to where in which you get a press release and you say, wow, 21's Bitcoin per share grew from 0.05 to 0.06. I just got more Bitcoin exposure. I got wealthier in Bitcoin terms just by being a shareholder of this company. An ETF is not an operating company. You know, IBIT isn't outgrowing your exposure to Bitcoin. It's a static exposure through their security instrument. Whereas for us, we're a business. I'm a CEO. Right. I get up, I work every day to grow how much Bitcoin your share represents on our balance sheet. That's
a lot there. Jack Mallers, for many of you that probably are wondering if you don't know who he is, he's rather young, and he comes from a pretty good lineage of smart investment people and family members. I'm going to pull up his father's Wikipedia page real quick so you can see who his dad is and why this young man is so smart and comes off so eloquently and is able to present as a 20-something guy on a major network finance newscast, hold his own, and tell you what he plans to do. And he's currently the CEO of Strike. This is his father here, William Mallers Jr., former commission merchant executive who was an early adopter to Bitcoin, who has transitioned to the cannabis industry. Father of Jack Mallers, who we just saw, the CEO of Zap, Bitcoin investment and payments company, powered by the Lightning Network, son of William J. Mallers Sr. So his grandfather, Jack's grandfather, a member of the FIA Hall of Fame. Mallers' father is also a chairman of the Chicago Board of Trade. Mallers joined Mann as a vice president, continuing to run their operations as a division. So the family, very smart, very ingrained in traditional finance. So I saw yesterday when this news broke, quite a few people that I respect in Bitcoin X were talking about how this feels like we're being co-opted. You know, there's a difference of opinions, and we've talked about this on the podcast a couple of times, between the Bitcoiners of my generation, the people that were here and I'm the very tail end of this part of the 2009 to 2013, let's say, because I came in December of 2013. I really started my journey, really started it in 2014 when I was really starting to accumulate. And the post-COVID Bitcoiners. There's an ideological difference between the two. My generation of Bitcoiners are more cypherpunk, anarchist, F the government. We're trying to change the whole system. We're trying to be something different, end the Fed, all that kind of stuff. In this newer generation, is more number go up, is more trading, is more coexisting with and being very excited when we see things like a strategic reserve and we see things like MicroStrategy and all that. And I'm not saying there's not people from my era of Bitcoin that don't get excited about that stuff either and think it's good, but there is a argument and a discussion that we can have about what is this, because the hashtag here, Jack Mallers 21 is building a Bitcoin bank targeting a $500 trillion market. So building a Bitcoin bank. Let's talk about banks first, so we can tee up this conversation here. Banks run on fractional reserve banking. They don't need to have all of their reserves back 1-to-1. They lend out, create money, all the things that banks do. Invest the money you put in there. They don't have to have it on deposit. All that stuff that banks do. And by creating a Bitcoin bank, there's a conversation being had of like, what does that look like? Are we doing a backed 1-to-1 Bitcoin? Are we going to start borrowing against the Bitcoin and creating these derivatives and creating like the same model that we already have with the traditional banking system? What is that really going to look like? How is that really going to play out? And there's a lot of Bitcoiners that are questioning that, and even going as far to say, which I've seen, like I said, that this isn't good for Bitcoin. This isn't good for the space. I don't necessarily agree with that take. I think Jack has been a very big proponent for Bitcoin. He's been a very big, in my opinion, this is just my opinion. This is just Don from the Defion Productions opinion. I'm a nobody. I think he's been a net positive for the space. The same way that I think Michael Saylor's been a net positive for the space, while also I've been very critical of some of the things that I think Saylor has done or plans to do that I don't always agree with. I think you can like people and think they're net positives without liking every single aspect of every single thing that they do. Kind of like when we talk about politics and, the MAGA. When we talk about MAGA and how every single thing Trump does is he never does anything wrong. And I don't think that that's a great way to view. I think, everybody's human and humans are allowed to make mistakes. And sometimes when you make mistakes and grow, you can actually be better on the other side. And believing that they can't make mistakes is not good for anybody. So I'm not saying Jack's perfect. I'm not saying that what he's going to do is perfect, but I like the idea of this integration, because here's the thing. Even when you read the white paper and you read the early interactions between Hal and Satoshi, talking about, if it doesn't go to zero, then maybe this thing goes to 10 million a coin. Like if this thing really catches on, then it really sucks up all aspects of finance. So if that's what is going to happen, or if that's what's happening, then this is part of that transition. Like if Bitcoin is really going to fix the money, like we say, fix the money, fix the world. If that's really going to happen, there's going to be steps that are going to need to happen before it's just a global Bitcoin takeover where we're just using sats to price everything. There has to be these things like ETFs, which we have now. There has to be things like MicroStrategy and what Michael Saylor's doing with his business. There has to be things like GameStop deciding to put that on their balance sheet. And now we have Jack Mallers, who's doing what I believe that MicroStrategy and Michael Saylor is ultimately trying to do as well, which is to create some platform of Bitcoin lending and maturing that space. And I think Jack is taking it a step further and really trying to expand this thing and have, a Bitcoin bank. And when, you hear bank and you have all these thoughts traditionally of traditional finance of what that looks like. I don't know if necessarily we know what a Bitcoin bank looks like yet until we see it in practice and actually operating. And Jack was very careful. If you watch through that whole clip of what he was saying, he's not promising anything. He's just giving you an idea of what he wants to do and hopes to do with his idea with this Bitcoin bank. Let's see, where was the other article that I had? Here it is. Simon Dixon. Simon Dixon, if you're on X and you're not following Simon Dixon and you're a Bitcoiner, in my opinion, you're doing it wrong. Great follow. He jumps in spaces all day long from morning until night. If I get notifications because I got notification bells on for Simon. If Simon's in his spaces, I jump in because I think and again, I don't agree with every single thing Simon says. I probably agree with like 75 to 80% of what he says. And there's 10 or 15% that I absolutely don't agree with, but I just like how intellectual he is. And I like how he is well thought out in his theses. So this is what he tweeted earlier today. Jack Mallers 21 is launching a SPAC as a capital-efficient alternative to MicroStrategy, backed by Cantor Fitzgerald, a primary bond dealer to the Fed. For those of you that are not keeping track at home, who's the CEO of Cantor Fitzgerald? Howard Lutnick. Who is Howard Lutnick? Howard Lutnick is the secretary to finance for Donald Trump right now. You see the pieces coming together? Here's what I think the real play is. SoftBank, a Japanese bank, putting in $900 million, Tether, 1.5 billion BTC, and Bitfinex, 600 million BTC, are putting in Bitcoin seed capital. Japan is dumping treasuries. The dollar is weakening under Trump's tariffs. Long-term yields on bonds are rising, and they're setting up for a short dollar, long Bitcoin trade. Expect a stablecoin backed by US debt plus BTC somewhere in the mix. In fact, Cantor is already custodian and shareholder in Tether already. They're draining yield, stacking sats, and using Fed equity debt markets to do it. You probably should be considering if you should be doing the same. This is Trump-aligned capital betting against the dollar, pretending they are MAGA. Full disclosure, Simon is a shareholder in Bitfinex through at Bank to the Future. And then he's got this here. I don't know if I click on it, if we can get, yeah, there we go. 21 compares favorably to MicroStrategy across metrics. Here's MicroStrategy, pure play Bitcoin exposure. It's got 75% there, 21 full. Bitcoin native operations, none, 21 full. Existing debt balance, half, full. Debt collateralization, 25%, full for 21. Inside ownership, half, full here. Purpose-built KPIs, half, full here. And then 21's compelling investment possibility. MicroStrategy size poses questions about potential diminishing returns as it continues to purchase Bitcoin. With 500,000 Bitcoin, MicroStrategy must purchase larger quantities to increase BPS, reducing the per dollar impact on future capacity or capital deployments. 21 will launch with 42,000 Bitcoin and potential for a more capital efficient growth trajectory. Capital efficiency versus MicroStrategy. 21's balance sheet simplicity provides additional flexibility for strategic capital raises. Innovative BTC KPIs as a purpose-built platform for Bitcoin investors. 21 will be guided by Bitcoin-specific KPIs, including BPS and BPR. 21 is a potentially superior vehicle for investors seeking capital-efficient Bitcoin exposure. So Simon makes the argument that 21 is a better play than MicroStrategy, but I don't necessarily think that it's going to be like a 1 versus 2 player versus player type thing. I think if you ask Michael Saylor how he feels about this, I think he would be happy that you have another player in the field expanding this and talking about targeting a $500 trillion market class. I mean, Bitcoin's market cap right now is slightly under $2 trillion. You're talking about a 250x from here. I mean, there's a lot of money in capital for people to all eat. So I think that I don't think Saylor's necessarily upset with this. What I do find super fascinating, though, is that you have a sitting cabinet member whose company is heavily involved in this deal, which is a huge deal in the Bitcoin ecosystem. And, he's got Cantor Fitzgerald, he's the CEO of, and he's got Tether, which, Cantor Fitzgerald is significantly backed by. You rewind a little bit and you see how heavy Trump has went in his administration have gone into SBR, Strategic Bitcoin Reserve, Howard Lutnick, Besant, Bo Hines, all these people talking very positively about Bitcoin, the stablecoin legislation. This is really brewing to be something pretty, this could be really big. They're laying down the groundwork for a very interesting end of 2026, I think. If we see what we think we're going to see with the M2 money supply increasing, like we showed you in the earlier slides about 10 minutes ago, and you have these organizations like 21 and MicroStrategy continuing to buy and pull from the supply, because you have to remember too, this is the big thing that we got to get back to. There is a finite supply of Bitcoin. There is a finite supply of Bitcoin that is released every 10 minutes through the blocks to being released to the public that the miners are mining that people can go to exchanges to get. Every 4 years that halves. We know that's the halvening. So there's only X amount of Bitcoin, 450 a day that can be bought. There's only 450 a day that are being released that can go to these exchanges, and you have players like BlackRock, Fidelity, just on the ETF side that are buying Bitcoin off exchanges. You have MicroStrategy, which is buying Bitcoin off exchanges. You have GameStop and the Plant one with Dylan LeClaire, that company that's putting, I just saw a tweet earlier today actually that they just purchased their 5,000th Bitcoin to put on their balance sheet. So companies like that, Tesla, which has Bitcoin on their balance sheet, I'm not quite sure if they're adding, but they haven't sold. Obviously, MicroStrategy adding, and then now you have 21 entering this ecosystem, and they're all buying Bitcoin off exchanges. That isn't taking into consideration everyday people like me or anybody else that wants to go to the exchange on Coinbase or Gemini or Kraken or Binance or any of these other exchanges and buy Bitcoin. So at some point, we're going to see a supply shock where people are coming to market and the market doesn't have the supply, which means the price will go up because that's how supply and demand works. So even at 93 and some change, what are we sitting at right now? 93.4. Even at 93,400 Bitcoin, we haven't even come close to seeing a supply shock on exchanges. We haven't had that happen yet. And I think that we are getting closer and closer to a place where you're going to have way more buyers coming to the market to accumulate Bitcoin than you have sellers. Now, when that happens, the price has to go up because you need to have more sellers be incentivized to sell their Bitcoin so the buyers can get what they want. That's why the price goes up. That's the supply and demand model. When you have more buyers coming to market than you have sellers, the price goes up and you find out which level you reach where the people holding are enticed to become sellers to sell to the people that are buying. That's how the supply and demand model works. That's how supply shocks work. And I think these types of things where we're seeing with 21 and Jack Mallers and MicroStrategy and the ETFs and all this stuff that's brewing is getting us towards some sort of supply shock that we're going to see. And it looks like it's lining up at some point, maybe in the next 3 to 9 months, that we're going to see some crazy shit happening in this ecosystem. I know, Rich, more on the political aspect of things. You can probably speak more to than the Bitcoin stuff. How do you feel, just as an outsider looking in, Howard Lutnick, his company, Cantor Fitzgerald, being one of the seed players in this 21 Bitcoin endeavor while he's sitting in as the treasury, the finance treasury guy in the Trump administration? What are your thoughts on that? Any initial thoughts?
That's my problem with any of this. Anytime you have the ability to make policy and you can directly that guide your company, whether it's on purpose or you know what you're going to be doing, so you tell your company to do whatever because you know you can navigate those waters. So either you're controlling the stream or you're navigating the stream because of that overlap. We know that there's a ton of politicians that have their hands in this stuff. The problem for me is it's problematic because of his position. If he was just an elected guy in Congress or Senate, whatever, that's fine. But we know that there's disclosure and all that stuff, but it's different from what specifically he's doing. There's no way to divorce rich people from their money and their influence when they're either elected political officials or they're holding political appointed offices. It's never going to happen. Anybody who thinks it's going to happen is naive. So I don't like it. My only hope is that I don't know anything about Howard Lutnick. I recognize the name. It's funny because I recognize the name from his position in the government, where you already knew the name because you knew his position within his company. I recognize the name as soon as you said it, knowing what he is, and I knew that he had that connection. My only hope is that Howard Lutnick is trying to do the right thing, not just for his company, but for and truly what he believes is. I don't have a problem. If he really is a true believer in what he's trying to accomplish, then good for him. And that's if his company benefits from it, we all know that these companies are going to benefit one way or the other. Hopefully everybody benefits, not just his company. If that makes any sense.
For me, full disclosure, I like Howard Lutnick. I'm a Howard Lutnick fan. So I'm going to be critical while also stating that, like I said before, I think it's very important that the people that you support and the people that you like, you're still able to be critical when they do things that seem a little off. But what I will say is a couple things. Number one, like I said, I like Howard Lutnick. I like what he's done. I like his history. I like the things that he's done. Prior to getting this position, he was vocal. He was before he was picked. When he was in the running, he was one of the names. He went on the Anthony Pompliano podcast, and we actually showed a clip here a couple of months ago on this podcast of from that interview that he did, and he was transparent and said that he owns hundreds of millions of dollars worth of Bitcoin, and he spoke in that interview eloquently, like he wasn't just buying Bitcoin because he wants to sell it like he would any stock or any other sort of investment. He spoke in a way where he, to me, as somebody who gets it and is very critical when I hear somebody say I own Bitcoin, I want to know what that means to them. He spoke in a way where I'm like, yeah, that dude seems like he's a Bitcoiner and he gets
have to
it.
go through a confirmation hearing, I'm assuming? I
honestly, I don't know. I don't follow it. I'm not. I
know
that.
It's out there somewhere.
Yeah, I know that. I know RFK did. I know Pete Hegseth did. I don't know if he did or not.
Chairman of my assumption would be that he would have to, and I'm hopefully they ask those questions, and I think it's a good point. I think it's like. They bring it up all the time. Oh, this guy's got this stock, or this guy owns this company, or things like that, or like Dick Cheney had his connections to Halliburton back in the '90s.
Yeah.
There were some, and a lot of, but we know what happens. These people, they leave office and then they get hired in their post political careers to work for these companies. Like, we know how it works. So again, I don't know a lot of these players like you do, obviously, but. Like you said, we can be critical of him if he does something that is, but in general, as long as we're willing to be critical of the people that are in these positions and not just blindly follow them because we think it's good for the brand, then who cares? As long as I take the guy at his word. I'm not a Trump fan. I think everybody knows that. But if he surrounds himself with people that can do the job, then fine.
You said you're not a Trump fan, right?
I'm not a Trump fan.
I've been very vocal on how I feel about Trump. What I will say, and I've argued with people for the 2 or 3 months that he's been in office so far, what I will say, and I think that if you cannot come to this conclusion, you are just completely partisan and you have blinders on and it won't allow you to see what's in front of you. And the first 2 or 3 months of a presidency, regardless if it's a first term or second term, I've never seen a president do as much in a short period of time. And not just that, I'm going to take it a step further because a lot of the other shit I don't really care about. It's the finance stuff that I'm intrigued by. So it's all that. So put aside all the stuff that he's done that are like the executive orders on things that are like, okay, the border, like that stuff's important. But to me, this is my realm. Finance, my realm. Just in the finance aspect of what he has done. And again, I'm not saying I agree with 100% of the things that he has done. I don't, and I've argued them. I've litigated that of what I feel. What I will give him credit for is I've never seen another president in a short amount of time do so many different things in regards to finance, specifically, as Trump has done. He's made so many changes and thrown so many wrenches in things and tried to change things that need to be changed. I don't agree with the route. I don't agree with even some of the things I think he wants to do. But what I do wholeheartedly agree with is something has to change. And he sees that. The people he's put into power see that. And I have to give him credit because no other president in my lifetime, including the one that I think is the best in my lifetime, Ronald Reagan, and Ronald Reagan would be the next one because look at what he, and I've talked about all that before, what he did when he came in regards to the mess that Carter left him and with high interest rates, and he had to do a lot as well, and he did it over his 8 years. But what Trump is doing is he is looking at the system that we look at, and he's saying, because his actions are saying so, this is jacked up. This is not right. It's broken, and I'm going to throw things at it, and I may break some things, but I'm going to try to fix it. And I may not agree with how he's trying to fix it. I may not agree with some things he's doing, but what I do like is that we finally have a president that is saying, you know what? 1 plus 1 is equaling 3, and let's figure out a way to try to make it equal to 2. Because we know it doesn't equal 3, and we keep going to 1 plus 1 equals 3. We know it's going to be 3 every time, and we don't try to change the numbers to make it something different.
So, and I get what you're saying with that. Obviously, I'm not going to go into any of the other things. Some of his other
Those are other
points.
conversations.
Those are other
Just the
conversations.
finance part.
That's not what this podcast is about. So I
No.
don't even want to go down this. But in terms of finance,
Mm-hmm.
there are some things though too that you got to be like, wait, what? Like, there's got to be some things that did not make any sense in terms of finance. Some of the things that are having a negative effect. I mean, even like his own. We talked about it briefly before the year. His throwing in his own Trump coin.
Oh yeah,
I
for
mean,
sure. Well, that yeah,
So, I mean, to
that
me, like
yeah,
that's why
that was
I get frustrated.
stupid.
Because if
Yes.
I was just focusing on him,
Absolutely
as the finance
ridiculous.
president, but then he goes and he turns around, he does the crypto thing, he invites all these people in. Most of us we know are not real people. I mean, they're real people, but they're not. They're not really trying to build a crypto culture. They're trying to make money off of crypto for themselves and for their investors quickly, but they're not really in it for the long term, like the concept of Bitcoin. And some of them are, but there's just too many people that were at some of the, like the crypto, what did he call it? The crypto conference. and stuff.
put up the thing real quick. This is the Trump coin. This is the coin that he launched.
Yeah.
I mean, look.
Yeah.
It's been down since, what is that? Look at this. It's just let's go to all time. Like, look, it launched, it went up here, $56.45, and it's sitting at $11.90, and it's been basically in a range between what's that? In February it was $16, and here we are 2 months later at it's a shit coin. Like, that was a dumb move. It should have never happened, and it weakens the legitimacy of the good things that he's done in regards to Bitcoin in this space. That was a big misstep. Yes, I agree with you. And again, I was critical of that at the time, and I'll continue to be critical of those types of
But
things.
again, his finance folks, I don't think they're coming in after the fact. They weren't, because obviously they weren't officially in those positions. They weren't even anybody that he appointed wasn't physically approved for a week, 2 weeks, or whatever. Sometimes a month before they were able to actually take official control of things. So I'm not blaming some of the smarter people that I think he has surrounded himself with. Some of them just scratch their head and like, what is he doing? Like, this can't be helping us. And I don't. I'm not fond of the chairman of the Fed. But
Powell?
I mean, is Powell? I don't feel like those two being antagonistic to each other is going to help anything either. That's my problem.
Yeah, I
I
think
think that's harder for us to. I think that's harder for us to. I think it's as bad for the markets. It's bad for the markets that there's this. Powell says this, Trump says this. They're like two kids in the.
There's an
on the
argument.
playground.
There's an argument for that. But what I will say is, outside of saying he wants to fire him, which I don't think was great, that was probably, he could probably say that to Powell or say that
right.
to his aides, and his aides can say that. But coming straight from the president's mouth isn't great. So that aside, that I don't like that. But the critical nature of everything else he said before that, I 100% agree with.
Right.
Because he said, factually, that Powell called it transitory, which was a huge mistake, waited too long to raise rates, which was a huge mistake and correct, and now he's waiting too long to lower rates,
Right.
which is correct. Everything he's saying is
agree.
right, except he just shouldn't say, I can't wait to fire him, or he needs to be terminated. Like, that is just like unnecessary, because even if constitutionally you figure out a way to do that, the pain it will cause markets, all the stuff that comes with that is just like unnecessary.
And that's I wish and the people that are critical of Trump in his first term were like, if he would have just focused on the job and not gone off and all these other things that he does. And that's probably like I don't know what he could have been if he could have been more successful in his first term. And COVID thing changed everything too. But like, he could have maybe, if he would have just focused, like, and he gets himself into these other things where, he seems like he has, in the area of finance, he has some specific ideas that he wanted to do. And like you said, he's trying to accomplish them. Now, you don't have to necessarily agree with his goals, but I can definitely agree with you that he has been aggressive with trying to make changes with things that he said he was going to make changes about. He is trying to fulfill his campaign promises. That in that area specifically, I think with finance and banks and all that stuff.
Yeah, I agree. I would rather he just says, let's end the Fed. Honestly, instead of saying terminate Powell, I would rather he says terminate the whole thing, because I think the Fed has long
How does that
outstayed their
I mean,
welcome.
that's really difficult because that has got to be done by Congress. Right?
It was created without Congress.
No, but the president just can't dissolve the Fed.
I don't know.
I think it has to be done by congressional order because it's now.
It was created
even
without
though it's
Congress.
An independent organization.
It was created without Congress in the middle of the night on Jekyll Island.
But I don't know if they can.
Nobody has ever had the balls to even utter a thought to end that. So again, as crazy as it is to say this, I think it's a better statement to say, Powell aside, my differences with him or feelings of Jerome Powell as a person and what he's done aside, my problem is with the Federal Reserve.
See, that's
as an organization.
That's a much better approach.
Yes, I would get behind. Because
there's no promise that the next gal who comes in is going to be any better. Like, in terms of if you don't like the way Feds do things. Like, I'm critical that interest rates are taking way too long to come back down. They should be lower by now. Like, everything, and I'm not an expert, I just read stuff. And everybody now said by now the interest rates should be lower. Like, most experts that I follow.
Do you know what happens to Powell when he steps down next year because his term is up and he doesn't get? You know what happens to him?
I don't know. He moves into the nursing home. I don't know.
He becomes one of the Fed governors.
Oh yeah, he just goes back.
Stays in the board.
Position.
He's still a voice in the room.
Yeah.
Yeah.
Most of them they just go back.
They circle around.
Just go back to the
unlike Janet Yellen, who was the one before him, ended up going to the White House and
sometimes
under Biden.
Most of the time, if they're not retiring, and they just leave and they just go off into the sunset to the nursing home. They end up on
CNBC.
Yeah, I knew that.
They end up on CNBC and they're basically the voice of the Fed because they have all their friends there and they leak information and then they basically tell you what they think. You know what I mean?
No, for sure.
I mean, I'm from the era of Bitcoiners, and again, I don't know how every other Bitcoiner feels, but I'm the Fed Bitcoiner. The Federal Reserve, the United States, in our country, the central bank is the reason why we have a wealth gap. It's the problem. It's not billionaires. It's not taxation. It's not the Green New Deal. It's not climate change. It's not any of that bullshit that anybody's going to try to tell you. It's not trade wars. It's not tariffs. The right and the left aren't going to. It's the Federal Reserve Bank that sets interest rates. Jerome Powell, or whoever's in that position, but just happens to be Powell now, can get up to a microphone on a Wednesday and move markets.
Yeah.
Not just the Dow Jones, the S&P, and the NASDAQ. He can move the Nikkei, the Hang Seng, the everything. He moves every single market.
No, he can screw
based
up entire
on
industries.
yes,
he can screw up entire
yes.
industries.
That's too much power for one man to have.
Right, and that is the criticism of the Fed, that they can literally they can screw the auto industry by just refusing to adjust interest rates.
It's the problem that I have with everybody when we talk about when it's election season. It's the biggest problem that I have when people are trying to tell me that I got to get out and vote and that it's either Trump or Kamala or Biden. It's the most important election ever. It's like all this. It's like, no, man. Like, Donald Trump is not the most powerful man in the world. He's not. Jerome Powell is. Jerome Powell has more power than Donald Trump. He can move markets. He can change the economy. He can do. Look what's happening. Like you have Trump asking him to do things, and he's not acquiescing, and he has no reason to do so. Trump's not his boss.
Right.
And Trump has to literally get constitutional lawyers to even try to think about, if he wanted to fire him, what that process would look like, and it can get real murky, and he's got a million other things that are more important to do than to try to go through that process and litigate that. So Powell can do whatever he wants. He's doing whatever he wants, and he controls markets. And whoever controls the markets has the power. Because even when you look at the things that Trump does, there's temporary, like the tariff stuff. Like we saw the markets move, but it was temporary. It was a couple of days.
Right.
And then things reset because what did they do? Who'd they look to? Powell had a news conference. And what Powell said was much more important than what Trump is doing long term. In the short term, Trump's got a lot of power because of all the tariff stuff and the things that he's doing. It's got this short-term choppiness. But here's the thing. In a year and a half, he can get neutered.
Well, yeah.
They can vote in a whole new Congress,
right.
and then in 3.5, he's gone.
It's an interesting thing because, like, there's some truth to that. Like, unfortunately, unless Congress is willing, even if it switched parties, so much of what he's doing is executive order, and it's just he's got control of a lot of the departments, so they're kind of doing their own thing anyway. You're right. He loses a lot of his lot of what he can do, but not as much as people. He still will have a lot of he has kind of created, and we've kind of done this over the last 20 years. We've kind of created it kind of started after 9/11. We've moved towards a stronger president model anyway. And Congress tends to not be as, they don't tend to shut down the elected official, the president, as much as they could or should. But no, you're right. Like, the thing could change, and a lot of these things that are people concerned about, not finance related, are, could be affected, But the problem with these types of things like that's why, I'm a little bit of a student of history when it comes to this, but I know that, like, the country never really wanted to have, like, the United States Bank. So, like, you know what I mean? Like, other countries have the Bank of England and the Bank of this and the bank, but we don't have that. We just have the Fed, which is, I know, not the same thing, but it's like, it's almost, because we didn't have a central bank, we ended up with, like, these other mechanisms. Is that the way I should, is that the problem? Like, is that part of the same, or is it not really an overlap?
There is. They the Central Bank of England, all these other world banks and the Bank of Japan, they all collaborate and talk and basically listen to Powell because Powell's in charge of the biggest one of them all. So we lead the charge. What we do matters more. I mean, the ECB has lowered their rates already. They've already started to lower, and we haven't. So Powell moves at the beat of his own drum, and everybody kind of waits to see what he's going to do and our Fed is going to do before, anything in the traditional markets really move in any sort of direction. I want to jump into a couple articles too, because I know we got about 15 minutes left. This one here, this is BTF. Bitcoin ETF's record daily inflows 500 times the 2025 average. U.S. spot Bitcoin exchange traded funds saw a dramatic surge in inflows on Tuesday, totaling 16,898 BTC, worth around $1.6 billion at current prices. Year to date, the average daily inflow across all U.S. spot ETFs stands at about just 23 BTC, on-chain analytics from Glassnode said. This places yesterday's figure more than 500 times above the 2025 daily average. So on an average basis, throughout 2025, again, there's going to be days where it's higher. There's going to be days where there's negative outflows. We're averaging about 23 Bitcoin per day. And yesterday, April 23rd, we saw 500 times that. So that's a pretty big day. That would show a definite shift in sentiment. It's a good sign for bulls, bad sign for bears. This is what we're seeing. This is the supply shock that I think is in our future, in the not so distant future, with all the things that are happening. Next article here. Let's do this one first. A lot of people, BitPayne, good follow on X, by the way. BitPayne said a lot of people don't understand Bitcoin because they never bothered to understand money. They think money is what you use to pay for things, as opposed to, as Saylor analyzes, the steel with which you build capital markets. The former has always been and will continue to be credit. The key is that unlike under a gold standard, where the credit was paper cash, which was settled and audited infrequently, under a Bitcoin standard, said credit will be digital, eCash, settling orders of magnitude more frequently on chain or via Lightning Network, avoiding the formation of large credit bubbles that burst, causing mass economic disruption. You don't need to pay for everything in Bitcoin as long as the credit medium in which you are paying is verifiably backed by Bitcoin and relatively closely tethered in terms of settlement. I like his opening where he says a lot of people don't understand Bitcoin because they never bother to understand money. Because I always say, when people ask me about Bitcoin, if you don't understand the system that you currently reside in, the current stat-based system, the current credit system, the Federal Reserve banking system of fractional reserve banking, if you understand none of that, then you need to go study that first before you study Bitcoin. Because if you do it backwards, if you don't understand the system that you operate in on a daily basis now and you go to Bitcoin first, it won't make sense to you. You will not understand why we need this digital Bitcoin thing because you don't know what it's solving because you don't see the problem. In order to understand a solution, you first need to understand the problem. So study the system that you're in now, find the problem. Once you see the problem, and then you study Bitcoin, then the problem and the solution makes sense, and then that's how you can become orange pilled. Without that, it's very hard. And you'll still view Bitcoin as just another stock. You'll view Bitcoin as some sort of investment that you're looking to buy in at X and sell at Y, and you'll totally miss the point. So I like BitPain's article here to kind of drive home the importance of understanding money, studying the current system to get to a place where you actually understand what Bitcoin is solving. You'll never understand what Bitcoin's solving if you don't know what the problem is that's being presented with the current system. We'll go to the home stretch with this here. This is not a good sign. It's not getting a lot of mainstream media coverage, but when I saw this earlier today, I wanted to bring it up on the podcast, and I don't know necessarily how I feel about it yet. We'll see how it plays itself out in the coming months. But this says 42% of mortgage refinance applications are being denied, the highest rejection rate in at least 12 years. So if you take a look at the charts here, it goes all the way back to 2013, and you can kind of see mortgage refis being rejected. Looks like there was a high in sometime in between 2018 and 2019 of around 30-ish%. And then it went down and looks like a little bit above 10% right before COVID. 2020 to 2021, you saw a high of, it looks like 15% to a low of probably about 8%. And then here we are here in 2025 at a 42% application denial rate. That's people that are looking to tap that equity that they have in their home. So they have equity, and they're being rejected on tapping that equity. There's a number of different reasons why that could happen. Anything from their credit to the bank not viewing the home being worth refining and giving them money based on that home. The banks are in the business of making money. Let's say you have a $300,000 house that you go on Zillow and it tells you it's 300, and you have 200,000 that you still owe on your mortgage, and you have about 100K of equity, and you go to the bank to try to tap 50% of that and try to get 40 or 50 grand. Let's say 40,000 after fees and stuff like that, and your credit's halfway decent, but maybe the bank looks at your home and says that home isn't going to be worth 300,000 in 2 years. So we're not going to take that risk because you're too close to owing a lot of money and you have an overinflated home value, and we don't think it's a good place to put money.
It's also a bad sign for the housing market in general.
Yeah.
that is the banks thinking that we are about to have a housing market crash.
Yes.
That's the way I read that.
Yes. That's why.
Because I remember, I know a ton of people that in the early 2000s that were all running around talking about how much their house was worth, and they were all financial geniuses. And they were riding a market that was too high, and they were going to the bank, and they had, they did not have very much money. They weren't making very much money, but they were being approved for mortgages like $300,000 mortgages. And I'm looking at it. And my mortgage, the mortgage of my house in 2002 was $96,000. I mean, and I was barely making ends meet when I moved. And these people that were making less money than me between as a family, and I'm like, how I don't get it. Well, no, because the house is going to be worth more in 2 years after that. I'm just going to roll the new house. Like that was like, you remember when people were doing that, and I was like, no, that doesn't like. I didn't get an A in economics in college, but that does not. So this is reminding me of some of the stuff that I remember. People were getting very nervous in 2008 before the crash that the crash was going to happen.
We got about 5-ish minutes left. I'll put a bow on that with this. The real estate market. No, not that. Not that, just that's okay. The real estate market. Homes were not meant to be investments. That wasn't the point. Homes. I'm talking about homes, right? Buying a home and staying there for 30 years was not meant to be an investment. It was meant to be a place that you stayed in, saved some money with renting, had something to sell at the end, got some of your money back. It wasn't meant to be an quote investment. The reason it became an investment in quotes is because of how broken our money has become. And when you take a look at when you buy a mortgage, it's a 30-year mortgage, right? So you basically have 2 generations of mortgages since we got off the gold standard. Because if you go back to 1971, that's less than 60 years. So you have 2 generations of mortgages of 30-year overlaps from that time period. So since we got off the gold standard, you've had an acceleration of inflation, you've had an acceleration of the breaking of money. So then people have been seeking safety from a devaluing dollar. And when they seek safety from a devaluing dollar, they try to buy things that are going to appreciate in value. And one of those things ended up being real estate, because people came in and started buying properties and using that as a place to store value. So they bought apartment complexes, they bought houses, they were renting them out. And so we saw little by little money flowing from the commercial properties that people were owning into these residential properties that people were owning. And then you saw what happened with 2008, the CDS, the credit default swaps and all that stuff that we don't have enough time to get into. But then you saw money start flowing into regular real estate and homes. So then you had regular, everyday 9 to 5 middle-class families buying a house for 100 and at some point in time selling it for 2, and then saying to themselves, and I'm going to use quotes, I made $100,000 on my house. Problem 1 with that. If you bought your house 30 years ago for 100 and you sold it in 30 years for 200, you probably lost money. Because if you look at your amortization statement, when you spent 100 on it, depending on how much you put down, all the interest that you spent on that house.
Taking the house multiple times over.
Yes.
I think it's depending on the interest rate, it's anywhere from 2 to 3.
Yes. So people were having the illusion of thinking they were making money when they weren't making money at all. That was the first generation. This second generation that we have, that we can probably say got overlapped by 2008 and COVID, because now you're seeing prices skyrocket so fast that people are buying houses for $250 in 2020 and selling them for $500 in 2025. So now they're really realizing $250,000 because they haven't been in the house long enough to have to spend all the interest. But what they're not seeing is the reason why that's happening is because the dollar is devaluing so much faster than it did the first 30 years of that experience, that people are seeking things like mortgages.
If you look at everything, and I've gotten more into this, thinking about when we left the gold standard, I've looked at charts of things. And it's funny, if you look at from 1930 to 1960, 1970, housing, if you bought a house for $10,000,
Flat.
if you sold it 25 years later, it was like $11,000. Like it didn't
Flat.
go up. Values of things were flat. Like car prices did not go crazy until cars became more fancy. That but if you bought average size cars, like the average style car, they didn't go crazy in value. Now everything is like it's gotten worse and worse and worse. And if you look at that chart, I'm sure you've seen the chart where it's like this from 1930 to about 1960, and then it's now like this. It's gone up exponentially. Like not even like probably like to the third or fourth power, not even like like a 2 exponential. Like it's ridiculous, and that's why I laugh whenever when I see that one billboard that's on the 190 on my way here, and it says like your parents' house is not your your investment. Like if you're counting on your parents' house when they die, like that's not. It's housing's getting to the point that it's almost not worth. I think more and more people are going to do what they do in Europe. They're going to keep the houses and the families if they possibly can. Like they're just going to somebody in the house is when grandma gets too old for the house, someone's just going to move into the house rather than putting it back on the market because it's just financially not worth it anymore.
Let's end with this chart. Put this chart up there because this goes by what you just said, and it shows it in a graphic form. That's not what we want. We don't want that ad. So here we go, 1913, creation of the Fed, buying power of the dollar. It's up here, way at the top, right? Then you have the Great Depression occurring, end of the 1920s, and you see the dollar fall off a cliff. Your buying power falls off because we go through this phase of the Great Depression. Remember, we're still on a dollar-backed gold standard. Then things get better, right? The time that everybody talks about, the 40s, the 50s, the Make America Great Again, the era that we like want to, revisit so hard. That's that era right here. We peaked back out here, right there, right? And then slowly but surely, because what started to happen was we started to print more dollars than we had gold, but we didn't tell anybody until there. See that?
Yep.
Right there. It was happening before that. And then here we said, yep, you're right. We're not backing it with shit. It's really a shit coin dollar fiat nonsense. And then all we've seen steadily since 1971 is a complete destruction of buying power of the dollar trending towards zero. So houses being purchased here, right? In this from 1970 to 1980, my parents bought a house in 1979, the first one that I was in, and you're just seeing the dollar weakening. And when the dollar weakening, what happens to assets? What I'm doing right here. Right. Asset prices go up. And then you're just seeing the destruction of the dollar continue, accelerating, which accelerates assets. Real estate has become an asset price. The problem with that is there's so many problems with real estate, and we don't have enough time to get into it. But, your real estate guys are going to tell you how great it is, and it is for right now. But when people really figure out that there's better ways to store your money without having all the problems that come along with real estate, you're going to see at some point real estate come back to the norm. And you're going to rather be in something like Bitcoin when the real estate market once again inevitably crashes. It's a musical chairs right now, and when the music stops, you're going to want to have a chair, and Bitcoin is the chair. Real estate isn't the chair. It's going to play itself out. I don't know how soon or how far, but it will be that. It's going to go that route. We're a little bit over time. As always on this podcast, the only live stream podcast in the Niagara Falls area, Defion Productions. Again, the socials are going at the bottom of the screen. Follow along. Please like this video, share this video, subscribe to our YouTube, follow me on X. Don't trust, verify. Thanks for watching. Thanks for the support, each and every one of you. We love it. Peace. Till next week.